Making a video purely educational. Just wanted to give you guys our take. So we ended up being short oil, short all these different things. Look at oil falling from 130, from 130 yesterday all the way down to 121 and 117. So we knew that there was a good opportunity to get in, especially on these stocks that were overextended. Now, remember, keep in mind, like, where oil was just a month ago, 135, and now we're up, what, 40%, 40%. So at some point there has to be a correction and a pullback. This could go red again today, but we started with a flush and then we came back up. But look at the volume. Look at the volume. That just can't be sustained every day, and so that means that the market has to pull back once this stock loses steam. So what goes up must come down. We're still holding this position. We may get out of it just because of time decay, but again, the fundamentals are still the same. Looking at the 15-minute chart, if we get over here, if we get over this bar, then I mean we could rally, but 9 times out of 10 is coming back to retest these lows. Same thing with OXY. OXY is bouncing, but again, once we double topped here, trending down here again. Okay, draw this trend line here. It's going to be hard to reverse that. So that's the main thing you have to keep your eye on, because once we go below a certain level, that support becomes resistance. So now we'll retest. We'll retest in the 40s eventually at some point, and then we'll see how it works out. Let's talk about implied volatility. So implied volatility is, look at this double bottom. Look, every single time. Look at where this long-term support is. So here we are drawing. Look at this right here. So from this point, you see it bounces right here on June, and then it bounces right here again in a few more days later in June, and then we rally. So again, once we hit certain levels, again, look where we are right here. We're at 415, and then we're back up to 438 last time. So we hit 416 yesterday, and look where we are, 434. Who knows where we'll be at the end of the day? But it looks like we're starting to flatten. We made a double bottom per se in the market. Unless we retest these lows, you know, I'm still saying bear market. Okay, but let's talk about implied volatility real quick. So implied volatility, oh my gosh, look at that. Implied volatility is where options traders are pricing options higher than they normally would, or more expensive, because they're expecting to move. So basically, they're not going to give you a trade when they think the move could be huge for cheap. All right. So think about it. If they think that that 424 is going to 440, it's not going to be 2 cents. It's going to be 10 cents or 20 cents. They're going to make these higher. So these are higher because they are expecting the market to have a bigger range. Let's look at the range that we're doing versus before. So before, the range is, we got a high of 439, of 450, and a low of 439. So this is $10 range. We got another a high is $5 range, $7 range. Right here we got another $10 range. We got another $12 range. Okay, so on these days where we're getting $18 ranges between a high and a low, the day before yesterday we got a low of 436 and a high of 432. we got another $13 range, and yesterday we got another $12 range. We're ranging much bigger, so that means the moves are going to be bigger when it comes to the volatility. So when you see this implied volatility go up, that means there's going to be a bigger range. More volatility means more change. Okay, so I looked at this on Netflix. Netflix just is not getting up, but again, look at the volatility. Look at the implied volatility. So on the day where we dropped 526 all the way down to 382, the implied volatility was lower than it is right now. Okay, so we should be expecting some bigger moves because of implied volatility. The options premiums are higher. All right, so there's an implied volatility tracker or a indicator here, and you can look at that and allow it for you to gauge where these stocks could go. All right, so again, we got a double bottom. Once we break here on Netflix and even on Facebook, once we break here, okay, then we can go ahead and make a U-shaped move. But right now, the market is still uncomfortable with what's going on in Russia, and it could rally. We could rally. Look at implied volatility. When we dropped from 327 to 235, implied volatility was at the same place it is now. So do you think we're going to get another drop, or we're going to get a move up? It's probably going to be a move up, which is why we're looking at a key break area and back to this moving average. So what else is going on today? Amazon. Amazon just can't stay down here for long. I mean, matter of fact, we may end up buying some calls on Amazon, because look at where it's at. Amazon's just not recovered, and anything below 2,900 normally on Amazon is a good buy. Look at where it always goes back to. So think about getting a lot of those end of the week. We could go, how far can we, how low can we go? 3,500. Where is that? Where would that put us at 3,500 for next week? Where would that put us? Unlikely. Okay, so what we want to do is place a strike price close to where we think it can go. By the end of next week, we think we can be back in the 3,000s, but again, that's not guaranteed, and you can take profits on the way up. Again, I'm gonna reiterate this because people don't understand this. You don't have to wait for your strike price to get hit to make money. All right, when the stock starts moving up, all of these are going to double and triple on the way up. So you can buy here and sell here. You can buy 180 and sell at 250. Okay, so again, SPY, QQQ, implied volatility. Look out for it. Join our group if you want to do options trading, premium options trading. It is actually, I'm raising it up to $29 a month this month, today actually. So if you want to get in, go ahead and get in. One trade can make your day, one trade can make your month, one trade can make your year. So just remember, it pays for itself. If you got any questions, email me, greenwoodstocktrading@gmail.com. You can email me on Twitter, bell icon button if you want to get all my videos, all my interviews, everything that we educate on the market. Mainly option trade. You can join our free Discord group, Greenwood Stock Trading. That link is in the Twitter bio, and we are out.